Hi, I'm Giri Prakash from TheFederal. In today's episode of Big Money, where we discuss issues related to the personal finance, we have Mr. Ankit Khurana, who's the Chief Marketing Officer at India Lends. India Lends is a financial technology startup based out of Delhi NCR. The company was founded by former UK Capital One banker Gaurav Chopra, who has more than 15 years of domain expertise in driving innovation in digital finance, credit analytics, and mobile payments in India and abroad. Mr. Khurana himself is an award winning tech entrepreneur turned marketeer with over 15 years of expertise across diverse sectors. He holds a bachelor's degree in biomedical engineering from Case Western Reserve, Cleveland, and has attended multiple certification programs for senior executives at the London School of Economics, University of California, Berkeley, and London Business School. Mr. Kurana has been recognized by eminent global organizations such as HitLab New York and invited as a panelist to speak on tech, entrepreneurship, and marketing. India Lends, more about India Lends, it's actually an online platform that provides customers with financial products and services such as personal loans, lines of credit, credit cards, and gold loans. Today, we'll discuss a few issues relating to credit cards and, more importantly, how to build a strong credit history. Over to Mr. Khurana.
Thank you so much. It's a pleasure to be on your show, and I hope we're able to give the audience something useful where they can apply directly to their lives. And thank you for the introduction to India Lens as well. We've been in the market for 9 years. In fact, since you mentioned about credit profiles, India Lens was actually the first platform in the country to offer a free credit report. Um, and that is really tied to our commitment to helping people with building strong credit profiles and accessing credit irrespective of their geography and income. Um, Coming to how can somebody build a strong credit profile, I think the most essential part of building a strong credit profile is demonstrating good borrower behavior, right? And let me break this up into two parts. There are, a lot of times you get questions around, I've never availed credit, I'm new to credit, nobody would lend to me, so how do I build a credit profile? And then there are people who've had some sort of credit products that they've availed at some point, and then they have a credit history, and then they go to a bank or a credit card issuer or a loan provider, and they will want other credit products. So I'll answer these two questions, these two categories, or respond for these two categories separately. Um, for individuals who've already availed a credit product, especially people who went through certain financial hardships during COVID, faced challenges in repaying their credit, whether it were credit card bills or whether it was their loan EMIs. Um, Despite the fact that some people had the awareness that they could reach out to their financial service provider or their loan provider and request for a moratorium, and some people didn't really know about it, which in turn impacted their credit profiles. When I say impacted their credit profiles, what I mean by that is there were delayed payments reflecting on their credit on their bureau reports. These delayed payments are usually by banks or by lenders looked at not just in terms of how many payments have been delayed, but also in terms of days past due, what is called DPD in financial lingo. And the higher the DPD in terms of the number of days past due that an individual is, reflects that the longer the individual took to pay back, the worse it is for the individual, right? And that's where a lot of people suffer from having a poor credit profile, lower scores, and then money is something that everybody needs, whether it's an emergency or whether it's a planned expense. It ends up impacting their credit profile and ability to avail credit. So the answer for this category of consumers would be that whatever you have in terms of a credit card or in terms of your loan, make sure you never miss your payment. If you can, pay in advance, 2, 3, 5 days, whatever you can, make sure you pay in advance, because even if you've had a missed payment, if even if you've had a default or a delinquency, um, if you continue to make regular payments after a period of time, lenders pay or lenders put less and less emphasis on the on missed payments which happened, let's say, many years ago. So that is the easiest way if you don't need credit immediately, right? If you do need credit immediately, if you are in urgent need of money, and you feel that because of your credit profile, either nobody is lending to you or the rate at which they are willing to lend to you is extremely high, there are fantastic options available in the market today where, in case you've invested something, right, you have mutual funds, you have stocks that you hold, you can borrow against your mutual funds and your equity investments. In case you have gold that you've invested in, you can borrow against gold, where these are essentially collateralized borrowing, right, where the risk is lower for the lender and they're willing to lend money to individuals even with poor credit history, which can solve for the immediate cash need. But again, brings me back to the main point, which is whenever you borrow, make sure you're paying back in time or before time. For that's the most important thing, because for a young country like us, it's not just a 1 lakh, 2 lakh rupee or a 5 lakh rupee personal loan. There are financial goals. You want a car at some point. You want to borrow money for buying a car. You want to borrow money for buying a home. Whenever you decide to start your family, you want to borrow money for your kids' education.
Sure.
All of these things impact your ability to borrow whenever you need to make more important decisions in your life, right? So that's very, very critical. Another way of building or repairing your credit profile is through what are called secured cards today, right? So which are FD backed credit cards. So if you have a FD, most banks would offer you anywhere between 80 to 100% of your FD value. So let's say you have a 50,000 or a 1 lakh rupee FD. You can use that to get a secured card and again demonstrate good borrower behavior, making payments in time. And eventually, what will end up happening is that, let's say you had a 1 lakh rupee FD and you got a 1 lakh rupee limit or a 90,000 rupee limit. But when you demonstrate good borrower behavior, this limit can be twice the FD amount, three times the FD amount, and eventually the bank feels confident enough to lend you money without a collateral, right? This is for specifically for individuals who have borrowed but are suffering from a poor credit profile today.
Okay.
Coming to individuals who are new to credit or NTC, who have never borrowed anything, the easiest option for them is to go to their bank where they have their salary account and request for a credit card. That is the easiest way, right? Because that bank already sees that you get money in your bank account on a monthly basis. They're willing, they know what the risk is, and they'll be willing to give you a credit card or a personal loan. But the easiest way to get started is a personal is a credit card. In case your bank feels that that is not something that they can offer to you right now, again, a secured card becomes a fantastic opportunity, a fantastic option, where let's say you're a young kid, you're 20, 21 years old, you're just starting out, you've not received your salary for a very long time, or you don't have a very long history of employment, maybe 2 or 3 months into your job, but you're commuting 2 hours every day. You want a credit card to hail a cab or to go out with your colleagues. What you can do is you can maybe request your parents to set up an FD where they continue to earn interest, but you can use that FD to get a secured card, and then eventually that secured card turns into a collateral-free credit. But if you demonstrate good borrower behavior.
Okay, okay. Sort of let's deconstruct this entire credit card. Several
Mhm.
questions, I'm sure, which almost every viewer wants to know. Number one, you get several phone calls saying that you're eligible for this card and that card, kind of stuff. Which is the right card to pick up, and what's the kind of there is a Visa card, there's a Mastercard, and there are uh, cards which come with multiple benefits. There are cards which you need to pay some kind of a fee, annual fee. Sometimes they waive it off depending on how much amount of money that you spend. and there are free annual fee cards. So can you throw some light on that?
Sure, but before that, I would like to mention we must not forget our homegrown rupee.
Rupee.
Uh,
Yeah, yeah, yeah.
right?
Sure.
That's the hottest thing in the market today.
Okay.
And I'll come to that a little bit later. Why rupee is very exciting, but credit card is a lifestyle product, right? It's not so. Think of it this way, where let's say you have a emergency, whether it's a medical emergency, whether it is, let's say, a home emergency, and you need instant funds, right? Or you need funds within the next 24, 48 hours, 72 hours. A personal loan would be a much better product for those scenarios. Credit cards work best when it is as per your lifestyle, which means that if you feel or if the audience or the individual feels that they spend mostly on, let's say, eating out, you want to get a credit card which rewards that behavior. If the individual spends more on travel, they want to get a credit card which rewards travel spends. Um, and if you know today there are credit cards available which are so highly segmented that
Hmm.
any kind of spend you
Hmm.
will find a credit card suited for that kind of behavior.
Yeah.
For example, fuel cards, right? So if, let's say, there's somebody in your audience who has a long commute and they use their own vehicle, where they're spending anywhere between 5,000 to 10,000 every month
Hmm.
getting petrol or diesel. You might want to think about getting a fuel card, right? Which rewards fuel spends. So
Hmm.
it is totally a function of where the individual thinks they are going to spend the most, and how can they identify a card which would reward those kind of spends, right? Um, Second is, you mentioned lifetime free, no joining fee or no annual fee, or annual fee being waived off. It's again a function of uh, how much do you spend on a monthly basis, right? So usually what credit card issuers would do is they would give you an initial limit, which is a function of your income that you have declared or they have ascertained from their own data. It would be a function of that. So let's say somebody is making 25,000 rupees or 30,000 rupees. Their bank could get them started at, let's say, 60,000 rupee limit or a 50,000 rupee limit, or maybe in some cases 1 lakh rupee limit, right? Firstly, you don't want to spend more than 30% of you don't want to utilize more than 30% of your limit in a month. Now, if you have 50,000 rupees of credit limit, you don't want to spend more than 15,000 rupees on your credit card, which can still happen if you're using your credit card for, let's say, bill payments. Bharat bill payments, part of the India stack, is a fantastic way, which is available across different payments app, whether it's Amazon, whether it's PhonePe, whether it's Google Pay. You can make payments for your electricity, for water, for gas, and some, if you're living in a residential society, it's a recent RBI circular that came out, which is preventing or which only allows rent payments on credit cards to be made in to societies who have a merchant bank account. So if you're renting a house from an individual, you may not be able to use a credit card anymore to make rent payments. Some apps may allow, but RBI is not looking favorably to those transactions, right? So you want to limit your utilization to about 30%, which is good borrower behavior, right? Like I
Okay.
said, good borrower behavior is what drives up your credit profile. So good borrower behavior states 30% or less utilization, timely payments, right? These are the two things that we've established so far. Now, if you know that my spend is going to be 10,000 or 15,000 rupees a month, um, opt for a credit card where the annual fee can be waived off for that kind of spend, right? So if you're spending 15,000 rupees a month, which means you'll be spending about 1.8 lakh rupees a year. So opt for a card where your annual fee gets waived off on a spend of, let's say, 1.2 lakh rupees or 1.5 lakh rupees, so that you don't have to bear those costs. So what happens is cards which come with no joining fee, no annual fee. See, somewhere card companies have to make money, right?
Mhm.
Not saying they don't have other avenues to make money, but it's also one of the line items for card companies to make money, which is the annual fee for the perks that they provide on the card. So if they
Mhm.
don't have a joining fee or an annual fee, somewhere the perks will also not be the same, right?
Mhm.
Whether it is getting free tickets at Book My Show or whether it is getting some vouchers, these are all coming from the fee that you pay to the credit card issuer. Um, if you're a smart credit card user, you can opt for a card which has an annual fee which gets waived off on a certain spend threshold, so you can enjoy the benefits that come with a fee based card, but at the same
Mhm.
time get that fee waived off because you are making those spends. But if you're not so sure about whether you're going to be using it to make those spends or it's your first credit card, generally my suggestion would be to opt for a no joining fee, no annual fee, or a lifetime free credit card. Start using a card. Make sure that you're not overutilizing it. Make sure that you're able to exercise discipline in using the card. And once you feel comfortable with the product, then you can always opt for the next card to be one with a joining fee or an annual fee, where you can really reap the benefits of those extra perks.
Actually, I forgot to ask you the most basic question. There are people who say that we don't want a credit card. We are happy with our debit card and we'll sign checks and all that. Obviously, they won't have a credit history, right?
Hmm.
Uh, what happens in that situation? Do you really sort of encourage people to have a credit card so that they have a good credit score, or is it fine not to have one at all?
Let me answer that question with an example, right?
Hmm.
Let's say your parents want you to get married. They're
Hmm.
arranging for they're looking for a girl or a boy and for an arranged marriage, and you find somebody that you like by the pictures. But
Hmm.
what do you do next? You want to go out there and you want to inquire about that person. You want to call people. You want to ask them, how is the family? What does the guy do? What does the girl do? What do you know about them? Do you know anything from their past, from their history? That's normal behavior, right? Whatever, wherever we are risking something, we
Yeah.
want to make sure that we have some past record so that we
Hmm.
are able to make an informed decision. It's the
Right.
exact same thing for the lender as well, right?
Okay.
If you have an established history of being a good borrower,
Hmm.
what that translates to is a lower interest rate, more
Hmm.
favorable terms from the lender, maybe a
Hmm.
longer tenure. Maybe you don't want to borrow for a person, you don't want to avail a personal loan. You don't want to buy, something which is discretionary or on credit, and you're comfortable using your debit card. But when you do want to make purchases which you can't make without credit, for example, your home, for example, your car, right? There you have to avail a loan. You will still get the loan even if you've never had a credit history. You may still get a loan because these are collateralized loans. But if you do have a credit history,
Hmm.
you can get it at better terms because
Okay.
there is a behavior, good
The
borrower
background.
behavior that is already established that the lender can see, and they feel more confident that this person has used credit responsibly in the past,
Hmm.
therefore they must use credit responsibly in the future as well, right?
Okay.
So my suggestion is always to have a credit card. Make sure that you are using it in a disciplined manner so you can build a credit history,
Hmm.
just so that when you need credit where you can't do without credit, you're
Hmm.
able to get the best possible offers and the best possible rates or the best
Hmm.
possible terms
Hmm.
at that point in time. uh, right, so that's really what my suggestion is.
Okay. Having bought a credit card and started using it, there are certain pitfalls. One thing that one finds is about this minimum amount due. What's the
Yeah.
trick? What exactly does it mean? Should one just
See,
pay back and get on with life, or you clear off whatever that you have, uh, taken credit for?
paying just the minimum amount due, in my opinion, is the most criminal thing that you can do for your personal finances. Because what minimum amount due is, usually it's about 5% of your total credit card bill that is due. On the remaining amount, so let's say you had a bill of 10,000 rupees, your minimum amount due is 500 rupees. Now, on the balance 9,500 rupees, you end up paying anywhere between 3.5% to 5% monthly interest rate. You can find that in your credit card key fact statement. Whenever you avail the credit, you got the credit card, or you have a credit card app or your bank's app, you can go and look up your key fact statement. Every bank is required by RBI to provide you with a key fact statement. You can see what the interest rate is on the credit card. But more importantly, that interest is not levied from the due date. The interest is levied from the date of the transaction. So the best part of a credit card is that you get anywhere from 45 to 51 days of interest-free credit period. You lose all of that. And you pay a prohibitively high interest rate on your purchase. And if you continue to do that, that is how people get into credit card debt. And then people feel that credit cards are a bad financial product, right? A better option than paying minimum amount due is that most credit cards today give you the option to convert your statement balance into EMIs. EMIs usually are at a lower interest rate. So as opposed to a 3.5% to 4% that you would pay on a revolving balance, an EMI could be anywhere between 1.5 to 2.5%, depending on
Okay.
your credit profile.
Okay.
Second, because these are converted into EMIs, you have to make these monthly payments. So it encourages you to be more disciplined. And that ensures that you're not accumulating debt over time, right? Hence, paying minimum amount due should never even be an option in your mind. Even if your bank or your credit card company does not offer you an opportunity or an option to convert your balance into EMIs, I would suggest you much rather take a personal loan, use that personal loan to pay off your credit card, and then pay off your personal loan in EMIs, just to make sure that your cost of funds is low and you're able to exercise some discipline. If discipline is the issue, my suggestion would be to go into your credit card controls, set a bare minimum limit, and don't spend more than that. Or rather, when you set your controls, your credit card would start declining if you're spending more than that. So that is a reminder for you that I should not be spending more than that.
Okay. The other one is about the credit score itself. You open the account, you see, assuming somebody has taken several credit cards, closed it, and opened a new one, and all that. Still, your credit history is quite low, at around 700 or 650 kind of points. In a scenario like that, does an organization like yours help a customer to actually get the record or the cleaned up, making his credit score much better?
See, if you've taken a credit card and you've closed it, that will not. So that is not necessarily the reason for why the credit score is low. The biggest contributor to a low credit score is missed payments. So
Oh.
if you've not missed any payments, opening a new or getting a new credit card and closing an old credit card does not have that big an impact, unless your first product was a credit card, and closing that account will significantly reduce the vintage of your credit profile. By vintage, I mean how long have you had some form of credit available to you, right? That is also a contributor to your credit score, because like I said, you want to know as much as possible about a borrower. So if a lender knows that you've had credit for, let's say, 10 years or 15 years or 5 years, they would treat it more favorably as opposed to 1 year, right? So opening and closing of credit cards does not really hamper the credit score as much. Paying not missing your payments does. Now, let's say somebody does have a low credit score. There are credit builder and credit repair products out there, right? Like one of the products that I mentioned earlier was a secured card, which means if you have an FD, or if you have somebody in your family who has an FD and they're willing to let you get a credit card on that FD, they continue to make their interest on that FD, and you can then get a limit which is up to from 80% to 100% of that FD value. But you have to ensure that you're making payments on time. because now you'll not only be letting down your friends or family whose FD are using, or even yourself if you have your own FD, but you'll be worsening your credit score even more, because for a bank, having a collateral means they can use up that collateral to pay your missed payments, right? So you always have to be sure that if you can exercise discipline, there are products out there which can help you build or repair your credit profile. But it all comes down to how well the individual is with managing credit.
Okay. Can you also share some points about CIBIL score? And of course, we did talk about it, but then overall, are there any other pitfalls that one should avoid?
See, firstly, there are four bureaus in the market, right? There is CIBIL, there is Experian, there is CRIF, and then there is another one. I forget the name. Usually, banks use either CIBIL or Experian. Do check both reports. Most free, they're all free for consumers. So you can go and you can log into any app and you can find your free bureau reports. Make sure that, and it is very, very important to check your bureau at least once a month. The reason for that being that, data, no matter how secure we want our data to be, a lot of the data privacy and data security measures are being put in place at a regulatory level today, right?
Okay.
Or quite recently. By checking your report on a monthly basis, you're ensuring that nobody there have been no fraudulent transactions in your name, right? So suddenly you realize, if you don't check your credit report regularly, you go and check it once in a year, and suddenly you realize that there was a loan that is showing in your credit bureau which you had never availed, and somebody borrowed and ran away, and it is showing as a missed payment and a delinquent account in your bureau, right? So making sure every month that you check your bureau once, nothing is wrong over there. There are no accounts which you don't recognize. That is the first thing. Then comes, if you do come across something which is fishy, there is something that you didn't borrow, but it is showing in your bureau, immediately contact the bank.
Okay.
No, you can inform the bureau that this is incorrect information, but the first thing that you should be doing is contacting the lender and informing them that this is not you. If the lender does not respond, every lender would have a grievance redressal method, right? You can just look up XYZ Bank grievance redressal. There will be a email address, there might be a phone number, there would be a nodal officer that would be appointed, and you can reach out to them. Finally, if a lender still does not respond to you, you can always reach out to RBI's ombudsman to let them know that this is a fraudulent activity that has happened on my account. The lender, I have tried reaching out to the lender, but the lender is not responding, and I need this to be fixed. And the RBI will ensure that the lender responds to you. Right. Next thing is, so a lot of times people are moving all across the country, whether it's for their job or whether it's for some other reasons, but, they may not have the same address on different, accounts. So your bank may have a different address, but by the time you took a loan or a credit card, you were living in a different city. Make sure that you are updating your identity documents as frequently as possible. So let's say you're from Delhi, your Aadhaar card said, Delhi gave a Delhi address, but now you've been living in Bangalore for 2 years, 3 years. Change your address, right? So
Okay.
that so any lender should not feel that this is a possible fraud that can happen. Also,
Okay.
on your bureau, if there are too many addresses, it can come across as a DROG from
Oh,
the bureau, that too many addresses were found for similar accounts.
accounts.
So ensuring that you're keeping your addresses and identity documentation updated is very, very important to ensure that your bureau profile is as clean as possible.
Okay. One final question before we round up. Um, how many credit cards should one have?
There is no limit to it. What is important is how much are you utilizing them, right? So I I personally have, I think, 5 or 6 credit cards. My
Mhm.
wife has 12 credit cards. But if I was to calculate the total utilization every month, in fact, if you go on the India Lens app, you can actually see your total utilization for you against your total credit limit, right?
Okay.
Your total credit utilization should be below 30% of your total credit limit.
Okay.
Um, Even at a individual card level, you should try and maintain that, but at least at an aggregate level, you should always ensure that your utilization is below your credit limit, below 30% of your credit limit.
Mhm.
Otherwise, there is no limit on credit cards. Of course, beyond a point, banks themselves become skeptical, right? Because they are issuing you a credit card based on what your ability to repay is.
Mhm.
So after a while, um, even a bank may not want to issue you too many credit lines.
Mhm.
And what that will happen is, what will happen at that point is that you apply for a card, it reflects as an inquiry in your bureau, but you don't have a card. So any bank would then be able to tell that this person had applied but did not get a credit card. It
Did
could
not.
be addiction, etc., etc. And not that I can say for sure that banks take that into account, but why have an unnecessary inquiry on your bureau profile? Because inquiries are one of the top reasons. Too many inquiries are one of the top reasons for rejections. So
Oh.
unless you are absolutely sure that you want to avail credit and where you want to avail credit from, avoid applying in too many places, because each one of them, especially credit cards, they would immediately put an inquiry against your credit profile, and they would all reflect in your bureau. So, so yeah, avoid too many inquiries.
Okay. You go to a shop, you could go to a Chroma or any of those things where they say that you want to buy an iPhone, swipe your credit card, 8,000 rupee off, or you want to buy an AC, 5,000 rupee off. How does one deal with a situation like that? Do you think that one should actually go ahead and do it?
See, there are two parts to this.
Mhm.
One, um, by the way, I just wanted to mention one more thing pertaining to your last question. I have
Mhm.
seen cases where the individual had a credit score in which was around 770, 780, but was
Mhm.
rejected for a credit card because they had too many inquiries. So just because you have a high credit score does
Does
not
not.
mean that you would get credit.
Okay.
Manage your inquiries well.
Okay.
Now coming to your next question, um, see, there are two parts to this. One, no cost EMI or interest free EMIs don't usually they don't exist, right? So even if you go and you say that
Mm.
XYZ company, or on XYZ company's phone you get an 8,000 rupee off on a certain issuer's credit card,
Mhm.
what they're doing is essentially giving you a discount upfront, which
Mm.
would have been the interest amount, and
Mm.
then they're charging you interest um, for the duration of the EMIs. Now, what ends up happening is that you're also paying GST on that interest, which does not go into your credit card discount. Or when you make the purchase, that is not given as a discount. So the net payment that you end up paying, see, if you were going to borrow, if you're going to take a loan or you were going to swipe your credit card and then convert it to EMI, you would have probably had paid, let's say, 15, 16, 18%. But for a no cost EMI, your net cost of borrowing would be anywhere between 3 to 4%. So there
Oh.
is definitely a benefit of availing such schemes. But don't be fooled that, I don't, there is, it is literally free credit. It is not free credit,
It is not free
right?
credit.
Uh,
Okay.
Second thing is, um, it is still a good option because
Mhm.
if you can, so let's say I have, I want to buy a 1 lakh rupee phone, right? Or let's say I want to buy a 1 lakh rupee television, right? And I can pay for that. If I swipe my credit card, I know that I can pay for it in the next month's cycle when my credit card bill would be due. But there is a no cost EMI option available to me. I would personally go for that low cost EMI or no cost EMI option, purely because It's a low cost fund that is available to you, right? Um, if I could use that same money and maybe have it, maybe use it for different purposes. I don't want to recommend or I don't want to be giving investment advice over here, but it's, you always have to think in terms of what is my cost of funds, right?
Achha.
So if your cost of fund is 3% over here, it's not bad.
Yes, sir.
And if you're getting an additional discount, it's not bad.
Fine. Yeah.
Right? But again, when you avail a scheme like this, your credit limit is blocked, right? So if your credit limit was, let's say, 2 lakh rupees and you bought a product for 1 lakh rupees, now that 1 lakh rupee is blocked for the entire duration of your EMIs. In most cases, some banks, very few banks that I know of don't do this, but most banks would do it, where that entire 1 lakh rupee would remain blocked, right? If you avail too many of such schemes, you would then not be able to make sure that your utilization is below that threshold of good borrowing, right? So it's okay to use it once in a while for products that you really want or need, but making it a habit is not a good thing.
Subscribe to the Federal's YouTube page for more news and updates.